Success is about doing the right thing, not about doing everything right. Gary Keller. Now, here at Charting Wealth, we focus on the reality of price movement by following trends each and every day. We follow 4 ETFs that give you a broad spectrum of various investment opportunities for you to practice trade. That's the S&P 500, the Nasdaq 100, 20-year U.S. government bonds, and gold. And we want you to practice with us every day, learning to do the right thing. The right thing, not doing everything right, because you don't have to do everything right. You have to find trends and follow them. And of course, the best trend is the biggest trend. That is the longest lasting trend typically. That is the weekly trend. And we may have one, we'll talk about it, crossing over. We'll talk about it at almost at the end of today's program. Let's jump into these charts. The S&P 500 up for the day, 0.32%. In fact, everything up, even gold and bonds up just barely. Now, let's talk about the S&P 500. It is a red down candle for the week. Little wick on the top, long wick on the bottom. Prices plumbed below the weekly. It's just above that now. And of course, we can see as far as the 2-day crossover that's occurred. We'll talk about that a little more, but the 2-day is going down. The weekly has not crossed over. Price percent oscillator is moving down, but still positive. And we see the derivative oscillator losing upward momentum. We go from the weekly to the 2-day chart. And remember, this latest 2-day candle represents Wednesday and Thursday. We had a crossover going down back on Tuesday. That represented Monday and Tuesday, that 2-day candle. Big red down candle. Candle we have finished forming on Thursday is a green spinning top, long wick on the bottom, and a wick, smaller wick on top. Derivative oscillator gaining downward momentum. Price percent oscillator heading down. Go to the 4-hour chart. And of course, we see some down movement in the morning, bit of recovery in the afternoon. Still negative on the price percent oscillator on both the 2-day and the 4-hour. Weekly still in a confirmed up move. That means we don't have a trade on the S&P right now. Why? Because the 2-day and the weekly are not moving in the same direction. One of our rules here, to trend follow, you have to have both your intermediate 2-day and your long-term weekly moving in the same direction. See a lot of sideways movement like we set up for the day, a little bit, 0.32% derivative oscillator losing downward momentum. So we'll continue to watch, see what there is to see there. Again, that 2-day chart is moving down, again, fairly nicely. And the weakening on the weekly chart, don't know if we've reached a top. But as you can see on the weekly, this is the first time since all the way back in early October that we've had a solid red down candle, albeit one with a wick on top and a long wick on the bottom. Not much of a wick on top. So again, might portend that the market's topping out, might just portend that the market is digesting weeks and weeks and weeks of gain since that last weekly vertical crossover all the way back on the 1st. The week ending the 1st of November. Keep all of that in mind. Let's go, we're going to stay on the weekly. Sorry, we're going to go to the Nasdaq 100. Up the most for the day, 0.36% versus 0.32% for the S&P 500. We see that the Nasdaq QQQ is showing us almost a doji. A red doji means indecision, tending down. Price percent oscillator still heading up. Derivative oscillator has lost a little bit of momentum for the first time in a long time. And it looks like it was just about flat last week. Might have lost a little bit over last week. But then we go to the 2-day on Q and look what we have here. It is actually confirmed crossing over, going down. Now that is indeed interesting. We're going to note that. Of course, that means for us that our weekly trade, the weekly is still confirmed up. 2-day is confirmed down now. That's how easy it is to change this stuff on these charts. We love them. Those of you who love the charts that we use wonder why you can't find the price percent oscillator on your chart. Maybe you can't find the derivative oscillator either. You wonder what the Heikin-Ashi candlesticks are all about and the Bollinger Bands that we use. and how easy it is to draw the horizontal lines, the trend lines, all those things. Super easy to do. It's freestockcharts.com, the paid version TC2000. Look for a link in your show notes. You'll see a discount to purchase the paid version, which is TC2000. Very reasonably priced. I think it's the best, the absolute best charting website that's available. So I just love it. And I've gone through a lot. I remember back in the day where you had to load up all this software and try it. It was crazy. This is a web-based version. It's amazing. I love it. So we see that we have the 2-day chart crossing over, going down, which takes us out of the up trade for the time being. Price is right there at the 2-day trend line with this latest move down. Well, you know what we need to do? I take that back. I'm saying that wrong. You know why? Because in fact, it's not going up anymore. I changed the There we go. I changed the crossover, but I didn't change the trend line. So now we got it sitting right there on it. And we're going to go to the 4-hour chart, check it out. 4-hour chart is heading up on the price percent oscillator, still negative. Saw down movement in the morning, bit of a recovery in the afternoon. Remember, these are Heiken Ashi candlesticks. After many days of solid up movement, we can see some weakening there on the 4-hour. Also, even with the up moves during the day, these are Heiken Ashi candlesticks that show you changes in average pace. That's why we use them instead of the standard high, open, low, close Japanese candlesticks. You want a great training? I'll put it at the end of today's program. It is actually on Heiken Ashi candlesticks. It is the #1 video we have ever put out for training. Heiken Ashi candlesticks. You'll get a kick out of it. Look at the end of the video today. You'll find it. Also, a special training for you, the secret of maximizing the Monday effect. Want to know what the Monday effect, aka weekend effect, is all about? You'll see that link in your show notes for all of you who subscribe at chartingwealth.com. Think you'll enjoy that. Particularly needed for you because we're going into a weekend. And what does that mean? That means that as we look at TLT 20-year bonds, looks like we might end the week with a weekly vertical crossover going up. Hasn't happened yet, but it may have a big up candle for the week. Price percent oscillator still crossing over here at the end of the day on Thursday. We'll see what's up on Friday. All of you who subscribe to our texting service, you just text to the number 33222 the word charting wealth. We will put you on our texting list and make sure that you receive notice of a weekly vertical crossover if and when it occurs. If you live overseas, I'm sorry, the texting service only works in the States. We may very well have that, folks. Pay attention tomorrow to that. If there is a weekly vertical crossover, we're going to look at potentially jumping into a practice trade right there in the closing minutes of the market. But we're going to pay attention to a lot of things, and I'll talk about those as we look at this chart. First, we see that we have a big green up candle, price percent oscillator heading up, derivative oscillator green and positive. That is positive. That's good. For the day, up 0.01%, so that's just barely up. Look at that booming 2-day candle, 2-day trend line. I mean, it's like stair steps moving up above the Bollinger Band the last 6 days. That's nice to see, quite strong movement. And then we go to the 4-hour chart. Here's where we see things booming up in the morning on Thursday and about the same in the afternoon, weakening a little bit on the price percent oscillator, derivative oscillator losing momentum. So what are we going to pay attention to as the market closes tomorrow? We want to see if indeed we have a slow day and things roll over going down on the 4-hour chart. Might give you some hesitation to jumping into that on Friday. You might practice trade some of it. In other words, if it looks less than ideal, one thing we talk about over and over again, whatever your X practice trade is, and by X trade, we mean what is the standard amount that you put into your practice trades? Is it 50,000 virtual dollars? If it is not as strong as it should be, but the 2-day and the weekly are looking decent, 4 hours looking poor, instead of increasing the loss factor, or I guess decreasing the loss factor that you might be looking at, in other words, getting out earlier, what you might do is shorten the amount of your trade from a $50,000 practice trade to maybe a $25,000 practice trade. That way, you're taking less risk by using a smaller amount in your trade. Certain things for you to consider. A lot of good training on that at the website. Read our book also, Charting Your Way to Wealth, available at the website and, of course, in your show notes. So again, keep those things in mind as we approach that. Hopefully, we'll see nice green candles tomorrow. Things will be strong. If they're not, then you can keep your powder dry. Wait till Monday. See if indeed and when we have a crossover going back up on that 4-hour chart. If it weakens significantly and it's a big down day for bonds on Friday, you can find another jumping in point if it presents itself. And if it doesn't, guess what? You don't have to trade. We don't have to trade. First rule, don't lose money. Second rule, make money. Now, we're going to leave those bonds. And lastly, we go to gold. Gold up just a little bit for the day, 0.01%. It was up more throughout the course of the day, pulled back some on us. What do we see going on, though? Still have a nice green up candle for the week. Price percent oscillator hanging up, derivative oscillator gaining upward momentum. Go to that 2-day chart. See, the 2-day is heading up. It's been flatter than it is now. It actually is heading up a little bit. Derivative oscillator, however, still losing momentum since it peaked back on Wednesday, the 8th of January. But we do have high. Let's see if we do have higher high for the week. 149.31 was the high prior week. 149.32, 149.31. We are not reaching a higher high yet, touching right up there near, I'm sorry, I'm looking at the 2-day chart. We did reach a higher high. Yes, clearly. The prior week, 148.38, 149.32. So yes, a good dollar higher. On that 2-day chart in the last 4 days, we still didn't reach a higher high. Got close. We would like to see a big green up candle, but that is showing some slowing there, and we see that the price percent oscillator is also likewise just barely ticking up. We go to the 4-hour chart. What do we see there? Trying to cross over going up. Doesn't look like it just couldn't quite manage it. That is probably from the stalling that happened throughout the course of the day. Derivative oscillator still negative. So again, keep your eye on that 2-day and on that weekly chart. We want to continue to see strong, good up moves on these candles. That weekly chart is still moving up. Would like it to be stronger, but it's still good enough for us right now. Keep your eye on the prize. So far, that has been a good trade for us. Somewhere around the jumping in point of 147.35 and up to a high of 149.32. So not too bad. Folks, that's where we are as we end the day. Again, hope we're going to have that weekly vertical crossover at the end of the week on TLT. Pay attention to that toward the end of the market, in particular on Friday. If you can take a look at what's happening in the market, God bless. All the best from the whole team at Charting Wealth World Headquarters.